Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the Forex market. It's actually a miracle hasn't happened. So you could see that we said yesterday that here we have to keep an eye on the possible fluctuation around this area. If market will be able to stay above one rate lows, it will keep chance on a possible deep retracement. Although we said that hopes and chances for that really small, because market is driven by the fundamental factors. Still, we need to keep an eye on what will happen. If you have chosen the way of the applying stop sell order around 1.10 area, as we suggested, you now should get good position in possible area. In positive area. So currently, actually, the paradox of the current situation stands that, well, actually, yes, this is driven by the political factors. And I suspect that situation barely will change until the 5th of November, because if it hasn't changed 2 weeks ago, and it actually started, why it should change just in the 2 weeks until the elections? So probably we will see this tendency right up to the election day or slightly after it, when the results will be announced. Whether we will get bounce after that, the market will close the position. As we said, that this is the actually old rule, sell the facts by the rumors. So maybe we will get some relief as on dollar, as on the gold market, depending on the results. And in general, this market will start closing the political hedge when they're buying United States dollars. But this is not for sure. So probably it should be. It usually happens, but this time I don't know. So, and as I said, the paradox of the current situation stands in actually that investors can't break their minds. So they're right up from the university bench. They know that United States assets is the safest and best assets in the world. And any situation where they see that the yields on United States are rising, they just can't think anything else but as higher rate on assets in the United States stands, as more attractive it becomes. If we would have indeed the safest and risk-free asset, that really would be correct conclusion. But currently the action of on the stock market, on the gold market, rising on the bond yield, it represents the devaluation of United States currency. It is losing of its purchasing power. But this narrative is not, investors can't fit it in things that they have studied in university. So actually they would have had to sell dollars and just trying to sell the American assets just because based on the fundamental background, but they do opposite situation. The revelation will come sooner or later, but when they will recognize that actually this performance rising on the yields is nothing else but rising on the credit spreads. It's rising of the risk of the potential assets and losing of the value. And when they will recognize that, this will be explosive action across the board, including the coal market. But this is not time yet. Probably this will happen somewhere later, and nobody currently tell when it will happen. Maybe next year. So what I would like to say is that actually, keeping all in mind, as I said, probably until the 5th of November we will not see any changes. And currently we have very small choice what to do. Next target right now is market has broken for a confluence, and in general the performance that we see is not typical for moments when the market is driving by itself, when it's following some economical factors, economical drivers. This is definitely not economical nature of this downside action. So next target on euro currency probably that we need to consider is 107. 107, this is COP of the big weekly triangle or ABCD, free drive pattern. So here ABCD completed, and sorry, not the free drive, 222 of course. So and that is downside action based on this. So COP stands around 107. While here we also have 107.40. That will be next destination point. Well, a very similar picture you could see on other markets. So if you'll take a look at the dollar index, it has absolutely the same construction with the 105 target. 105, 104.60 is a level. On the 10-year bonds, we also see no relief. As we said, whether this just grabbing the stops or it will be the upside continuation. Currently, it could be seen that this is upside continuation. And next destination point here will be 4.3. That's the target. So suggesting all this stuff, it also confirms that hardly we will get some really a big relief on the euro. Maybe in the beginning of the next month, we'll get the payrolls and some important data. But since it will be released just at the eve of the elections, whatever it will be, first of all, hardly will get really very big changes. Second, if events will be slightly higher or smaller of the expectations, it will bring no big impact on overall tendency. Yes, it could be intraday volatility, but tendency probably will hold until the election results. So on the lower time frames, I also see nothing by far. So on the 4 time frame chart, market stands in straight downside action. So as I said, we have not a lot of options. There are actually only two of them. First, since market is forming actually no patterns, it has only tendency, and we could recognize some range. The one option is that you could try to follow this range. So when the market will show minor bounce back to the border, just to minimize the risk, you could consider taking the short position with the stops somewhere above the previous top that had been reached. So once market will form reversal swing, your trading will be over. Of course, this is not very safe, because you're actually dealing with no patterns, with nothing, just with the tendency, and this background is a bit risky. Second option is just to wait for response of any kind, whether you're bullish, whether you're bearish. If you're bullish, you could wait when the market will start forming bullish patterns, some response to some support areas. Once it will be formed, you could try to take the position. If you're bearish, you could use this bounce and possible bullish background on intraday charts to trying to catch the bounce and sell into. So in fact, these options consist of two ways. Either you trade immediately with this stuff that you have currently on your monitoring, or you're just waiting. So this is a bit mental and psychological moment here. So you need to choose what you like more, you're preferable to you. But currently, guys, I do not see what else we could offer you in the current situation. Maybe on the Great British Pound, for example, the situation tends to be different. So you can see your currency is dropping fast, but cable stands around the confidence. Here, situation is a bit more stable, and it's a bit more comfortable to search for something, looking for something here. Maybe tendency will start changing, because Great British Pound currently is a bit different currency. That's actually all that we have. Hopefully, we will get more interesting this week.